Hello everyone, welcome back to Just Invest Today. In today's video, we're talking about all the Chinese companies that are undervalued. And this is according to Seth Klarman. He's never seen a better time to buy Chinese companies. We're going to listen to what he actually said about Chinese companies. He hasn't bought a Chinese company in a decade because he always thought it was overvalued. And this is basically his first time buying a Chinese company because he thinks the market is super cheap. Who is Seth Klarman? He runs Baupost Post, and Warren Buffett actually said that if he actually had money, he would invest in Seth Klarman. He's averaging around 20% per year starting his fund out. He's a very opportunistic buyer. He buys when there's like a lot of like strife in a company, or there's a spin-off or a special situation. It's almost kind of like Joel Greenblatt. So Seth Klarman does it very well. He's a really good value investor. So let's look at what he said about China.
What have you found about differential risk premium in international markets compared to the US?
We invest internationally. We have stocks in Europe. We have debt in Europe that we sometimes buy. We own real estate globally, although mostly it's US and Western Europe. Our mandate is broad and flexible, which lets us move where the opportunity is. We talked to our clients not that long ago about a few Chinese stocks we were finding. We had never owned anything in China for decades. It was in favor. Everybody was lining up to go there. I knew that they have a pretty authoritarian system of governance and didn't want to be on the wrong side of that. We stay away from most markets like that as a pretty regular rule. Yet the stocks were starting to discount such a significant degree of China risk that we felt like for the first time ever that you're actually getting well paid. And we found a company whose stock was beaten down 90% and thought that was attractive. And so far, so good. But it's not a large percentage of our capital. But it was a very intrepid idea by one of our analysts.
There you have it. Seth Klarman said he saw actually a few companies in China that were heavily discounted. He never owned anything in China for a few decades, which is insane because the market saw that China was so expensive and the market was giving high multiples. Not anymore. China is cheap at this point, according to Seth Klarman. So look, there's a lot of opportunities in China. He's seeing multiple companies that are cheap, according to his analyst. He invested a small amount in this undervalued Chinese company that went down 90%, and he made a killing in this company. We're gonna look at it right now. So Seth Klarman actually bought New Oriental back in Q2 2022. This was his first purchase, 2% position. So back then, the stock price was around what, $12, $13? And now the stock is at $55. Probably bought around $10, $12, and he made around 365% gain on his shares. But he was selling all during that time. He saw this huge gain. He was selling in Q3, selling in Q4, Q1, and even in Q2 2023. He's just reducing his position. And this was all because, remember, this huge fall from $185 in 2021 was because the Chinese government saying they're banning all education companies. And basically the CEO of this company was saying that they're going to recover from this. They're going to go into other opportunities. I guarantee you the analyst saw that what the company was doing because it was making profits during some of this run. And he was like, damn, this is going to recover. So this huge recovery, you can see and understand why everyone was selling it off because of the Chinese government. But you have to look forward and understand that this was going to recover if you've seen what the CEO was saying and if you see the profits coming back into the company. There's a softening of the Chinese policies happening right now because the USA is actually putting Xi Jinping kind of on the back burner and giving him all these restrictions. So now he's kind of fighting back, unleashing China once again. So when Seth Klarman says that he's seeing a lot of new Chinese companies that are undervalued and there's a lot of devaluing of these Chinese companies, he's talking about everything. He's talking about Alibaba. It's selling at a forward PE of like 10 right now at this point. We're seeing stocks like DQ selling for a 2 PE. It has more cash than its freaking market cap. It's selling super cheap. Even though this is a commodity bet on the solar market, compared to any other company in this field, it's selling super cheap. We have this credit company selling for a $217 million market cap. Guys, they have more money on the damn balance sheet than the market cap. It's below a 1 PE. It's insane, man. It's literally insane. Selling so cheap. I own it. We have Auto Home. has more money on the balance sheet again than the market cap. It's like 90% of the market cap, the balance sheet. Man, there's so many opportunities like this in the market. It's just crazy. I'm buying these all up. I know it's going to recover. It's going to 2x, 3x, just like New Oriental, guys. Are you guys investing in China, or are you just like too afraid to invest in China? You don't want that China risk happening to you, or some delisting factor, or whatever it is that you're afraid of, guys. But I'm seeing the opportunity. I'm going to buy these companies because I know it's going to recover. The Chinese market is going to recover, and it's going to be strong, guys. What do you think about everything that's happening in this video? Like it and subscribe.